for joining our today's economic data release, and what we're going to be having a look at is the UK unemployment rate. Now, let me just remind you, this is the percentage of the total workforce that is employed and actively seeking employment during the past 3 months. Now, what you can see here is how the economic indicator has been developing during the past 12 months. And you can see, based on the charts, that the UK unemployment rate declined more than the expected in November, dropping to 7.1% after a 7.4% reading in the second quarter. This low release moved closer to the Bank of England's threshold, below which the bank will start rising rates. Now, the jobless claims continues to fall, dropping to 24,000 in December after a 36,700 decline in November, below the 33,800 drop anticipated by analysts. Now, total workforce increased by 280,000 to 30.2 million in the third quarter. The unemployment rate that currently stands at 7.1% is the lowest since we have seen in 2009, at which point the rate was rapidly on the rise. Thus, the fact that the UK unemployment is so rapidly falling is a testament to the positive transition the economy is currently within. Mark Carney's previous stipulation that upon reaching 7%, the Bank of England would consider raising rates, as we have just mentioned, appears to be out of the window after issuing forward guidance 2.0. If we have a look at the forecast, that is anticipated that the data will not be changed and will remain at the same level, according to a survey conducted by Bloomberg. Let's have a look at what some of the economists are saying. Now, here we have some of the data. We can see some of the economists out of 31 that were polled by Bloomberg, and we can see that overall they are rather in consensus about what we might actually see in about 12 minutes. We can also have a look at what are some of the Dukascopy community members are saying about the upcoming data release and the potential impact on one of the traded currency pairs, Great Britain pound, US dollar. We can see that 25 people who participated in the Dukascopy fundamental contest, or about 54%, they believe that the impact will be bullish, while 21 believe it will be bearish. Some of the comments, well, for example, G is one of our community members. So the comments he provided to support his view on the impact is that number of those seeking employment-related benefits for December fell, not at that unexpected pace. Change in the number of unemployed for January is released at the same time as December unemployment rate. Both of them could go negative and take the pair into a positive move. So this is all the main fundamentals that we wanted to discuss with you today. And now I want to give the word to my colleagues who will discuss the technical analysis, the technical aspect, and discuss potential negative and positive impacts on the Great British Pound of the upcoming data release.
Hi everyone, thank you very much, Gita. So at the moment I will be talking about the possible positive news, right? My computer is not willing to cooperate with me today. Anyway, so what you'll be seeing, I will do the presentation on the Great Britain pound, Australian dollar. Those who participated yesterday know that this was the same currency pair as yesterday. However, there are very few currency pairs, Great Britain pound crosses, who actually have distinctive properties, or showing distinctive attitude towards the market sentiment. Why I chose Great Britain pound, Australian dollar. First of all, market sentiment is strongly bullish, 70%, the same as yesterday. And in addition to this, clear majority of pending orders is set to go long as well in the 50 and 100 pip range. Besides that, I guess it is worth pointing out that there are these two lines which you're seeing right over here and here. So these are the support lines for, I guess this one is for a channel up on 1 minute chart, and the one which is a little bit below it is a channel up support on the daily chart. So that adds up additional pressure for the pair to go higher. Now the trading strategy itself is to enter the long positions at the current market price. I guess dips towards the support lines, as we saw a few minutes ago, would be very favorable in such case. Take profit at the daily high, daily R1 at 1.85566, which you can see right over here, green line on the screen sharing, and stop loss at the 55-day simple moving average at 1.85230. So entering the positions at the current state would actually, oh, I'm sorry, something wrong. No, so entering the positions at the current state would lead to the possible loss of 13 pips and possible gains of 20 pips. I guess in a sense, if the pair continues to stay in the next upcoming 2 to 3 minutes, remain above the pattern support, 1 minute chart, this line right over here, I guess it would be rather reasonable to put a stop loss at the level where the pattern support will be during the release of the data, and that would be at 1.85319. Let's try zoom in, maybe. Yeah. And now if we talk about technical indicators, what we're seeing, I guess, well, first of all, there is clear, strong bullish support, and technical indicators point almost unanimous at the appreciation of the pair, as a lot of all of the trend indicators actually pointing at the further appreciation of the pair, which was seen if we zoom out a little bit on the chart in the past, I guess, yeah, in the past hour on the minute chart. So let's say that speaks very well in favor for us. In addition to this, I guess it's worth pointing out that neither RSI or stochastic predict any major turning points. Therefore, the pair is not clearly oversold or overbought, which suggests that during the release of the data, the reaction should be pretty much one-sided. And even if it shows some volatility, we'll definitely see support due to the pending orders. So yeah, just to summarize and enter the current enter the position at the current market price, dips towards the pattern support which was tested 5 minutes ago right over here, should be very favorable on that. In such case, stop loss could be set at the intercept, at the pattern support, which will be at that level of the pattern support, which will be during the release of the data at 1.85319. However, for the time being, I highlighted the 55-day simple moving average, which is at 1.85232, and take profit at the daily high, daily R1 at 1.85556. That being said, I guess that will be all from my side, I think, and I hope I mentioned everything. Just let me leave a screenshot of the situation on the whiteboard, and I give floor to my colleague Alexander, who will continue with the possible trading strategy for the negative surprise and also the market reaction. So Alexander, the floor is yours.
Thank you, Thomas. Hello, everyone. So as you guys already mentioned, today we are discussing the possible impact of the UK unemployment rate as well as claimant count change on the pound, and also I'd like to stress out that at the same time we are having a release of MPC votes, which can obviously shed some light on the UK monetary policy, meaning that showing that UK policymakers were univocal during the last policy meeting, or there was some doubts whether they should stay fast on their policy or to start raising interest rates already. So therefore the pound can be highly volatile during the next 4 minutes, and the possible negative surprise trading strategy will be based on the cable. And we see that during the last week the pair has been highly volatile, accelerating more than 430 pips, so quite an impressive move. However, after touching a daily resistance around 168.23, the pair has pulled back, and currently it's trading right at the level of 167.23. So the possible negative surprise trading strategy includes the entrance point at the market price, which is once again currently 167.20, and we see that on the 1 minute chart the pair has formed some kind of the symmetrical triangle with the strong support line right here, and we see that the trading range is narrowing rapidly. Therefore it's also supporting the case that the pair will be highly volatile soon. So the potential take profit could be placed around strong psychological level at 167. Yep, that's, to be more precise, that's 21 pips from the market price, obviously, and before reaching this level the pair will have to reach first of all 200 minute simple moving average and 4-hour pivot. Yep. When speaking about the stop loss, we suggest placing it around 2 days high at the level of 167.34, and that's just 12 pips from the market price, so not very far away from the market price. And speaking about the market sentiment, we see that currently it's just strongly bearish, with almost 61% of traders holding short positions on the pair. Meanwhile, I would like to stress out that yesterday the same market sentiment was equal almost to 63%, so there is a slight shift in the sentiments during the last day. When speaking about the currency index, we see that the pound is sold in 58% of all cases, while the greenback is bought in almost 66% of the time. And when having a look at pending orders, we see that in the 50 pips range there are almost 69% of them placed to buy the pair, while in the 100 pips range we see a completely different situation, with almost 58% of pending orders placed to sell the pair, meaning that in the longer term the pair is still expected to depreciate. And speaking about market sentiment from other market providers, that's practically the same thing that we saw yesterday, with vast majority of traders holding short positions. Yeah, well, still 1 minute before the news release, we see that the pair has just breached the potential take profit, and there has been a huge spike on the 1 minute chart, which equals 44 pips. So I guess data surprised market to the downside. Just we'll have to wait till we'll see data in the chat. And currently the pair is trading already below weekly pivot at 166.85. So we see that unemployment rate inched higher up to 7.2%, while jobless claims came slightly better than expected at 27.6 thousand. Nevertheless, the unemployment rate had strong negative impact on the pound, and the pair has received strong bearish impetus, and on the 4-hour chart we see that the pair is approaching 4-hour support around 166.65. Yep. While on the 1 minute chart the potential negative surprise trading strategy worked very well, actually, and so when having a look at pound and Aussie, we see that the pair has fallen more than 60 pips, and it's still falling actually, already penetrating daily pivot, I guess, or sorry, 4-hour pivot. Yep, and currently it's trading at 184.69. while the cable is stuck around 4 hours support once again. And I guess, yeah, and just to conclude, we see that technical indicators on the variety of time frames are either neutral or standing by signal, meaning that in the longer term the pair has still the potential to appreciate when being based on aggregate technical indicators. So I guess that will be all from my side. Hope that was useful for some of you, and I'm giving the floor back to you, Vita.
Thank you, guys. Thank you very much for the economic data release. I hope everyone was able to have a look at the markets with us and find out something new. Be sure to join us today at 12 GMT for our Dukascopy research webinar. And as concerns the economic data release, tomorrow we will be having a look at the US unemployment claims, and that is going to be at 1:15 GMT time. So be sure to tune in, and we hope to see you tomorrow. Bye-bye.